Palantir, first quarter earnings just crossed the wires, so let's get you those numbers right now. Palantir's Q1 EPS 13 cents. That is in line with estimates. Revenue up 39% to 884 million. That's versus expectations of 862.9 million. U.S. commercial up 71% to 255 million. That's a beat. U.S. government up 45% to 373 million.
What happens when a tech company smashes expectations across the board? Check this video out.
That is also a beat. Turning to the forecast, Q2, Palantir saying they're expecting for adjusted income from operations, 401 to 405 million. That's a beat. Revenue, they're calling for between 934 and 938 million. That also best estimates. For the year, they are now raising their forecast. So they're now seeing, with adjusted income from operations, they're now seeing between 1.711 and 1.723 billion. That's a beat. And on revenue, they're now calling for between 3.890 and 3.902 billion. That is also better than expected. I did have the chance to speak with Palantir CEO Alex Karp about the quarter. Let me bring you those comments. Karp saying, this is so improbable unless you have exactly the right product market fit at exactly the right time. And we continue to do this with a paltry go-to-market apparatus. The promise of AI is actually working if you implement it correctly on the battlefield and in U.S. commercial, and you can see it in the numbers. Karp continuing, we have a $1 billion run rate in U.S. commercial now, which is the gold standard for when a company has really broken through.
These results tell a deeper story. Palantir isn't just growing, it's compounding its advantage. Crushing expectations is one thing, but raising full-year guidance shows operational confidence. And that billion-dollar U.S. commercial run rate, it signals product-market fit at enterprise scale. This company is moving from potential to inevitability, quietly but unmistakably. It's hard to argue with numbers this consistent.
I also did ask Karp about downstream tariff impact, meaning was he seeing any smaller deals or longer sales cycles? Karp saying typically Q1 is our slowest quarter. We don't really start in earnest historically until later in the year. And what do you see in the numbers? 39% growth, 71% U.S. commercial, 45% U.S. government. Where we do see weakness is continental Europe, but that is 10% of our business. I did also ask him what would it mean if there was a U.S. recession? How could that impact Palantir's business? Karp telling us, in the current environment, we are crushing it. The more difficult the environment gets, the more unit economics matter, and the more unit economics matter, the more you have to move to productized software and AI-empowered software, and that is our sweet spot. Finally, I did ask him about Trump's budget proposal for $1 trillion for defense. What would that mean for Palantir? And Karp saying, we are very focused on making America more lethal and in a more efficient way, and we are succeeding with 45% growth in U.S. government. I don't know what the future brings, but we believe we have a completely differentiated set of offerings, Julie.
Palantir's strength lies in its ability to serve national security and corporate efficiency. Few can do both well. The numbers back up Karp's claim. 45% government growth and 71% in commercial isn't cyclical, it's systemic. And with AI now central to strategic decision-making, Palantir isn't chasing the future, it's building it. If the U.S. ramps up defense spending, Palantir is already in position, not waiting for approval, but delivering results. That's what a differentiated offering actually looks like.
So the shares have been bouncing around, which is quite interesting when you look at numbers like these. But consider the fact that the shares are up more than 60% just this year alone, at a time when most of the market has not been doing that well, to say the least. It's the best performer in the NASDAQ 100 this year by a wide margin. The best performer in the S&P 500 this year by a wide margin. The trailing price to earnings ratio of this company is in the 600s, which is just mind-boggling, and even on a forward basis is in like the 200s. So in other words, by most conventional valuation metrics, this is a very, very expensive stock.
Well, that has been, a big part of the bearish case, right?
But it keeps going up.
How many analysts have come on, besides, I would say, Dan Ives of Wedbush, who's pounding the table.
Right.
But that has been a big bearish point. That is, the valuation is unsustainable. You had, heading into the print, this stock was up more than 60% this year. It's up about 400% over the past 12 months. Right now, stocks, to your point, bouncing around. We're down about 1.5% right now.
The fact that Palantir leads both the NASDAQ 100 and S&P 500 shows that its momentum isn't just hype, it's conviction. Yes, valuation looks stretched, but growth at this scale in mission-critical sectors justifies premium multiples. This isn't a meme stock bounce. This is institutional revaluation of long-term AI infrastructure. And while bears keep pointing at the numbers, the market keeps rewarding execution.
So Jordan, just give us sort of your first blush reaction here to these numbers.
Yeah, thanks for having me today. Well, it's really more of the same. We keep seeing beat after beat. We keep seeing very, very high growth rates, especially in the U.S. commercial business. If we look at how U.S. commercial did this quarter, it's not really a difference in story from the last. If we look at more specifically what their story is here, U.S. commercial has been taking them really past where they were with the government segment for a while. We continue to monitor that. As you mentioned, the valuation here, while we don't take takes on that at Third Bridge, certainly this is what the story has been about. And if you look at why it's been the case, there's really a couple things to think about. The AI market opportunity is big. There's not a lot of pure play vendors that do this, and there's not a lot that you can think might be able to do it consistently in the long term. Now, why has Palantir been performing this way? Well, not only have they been able to execute, as we've seen in this quarter and past quarters as well, but what we've really seen is their ability to execute has demonstrated what many might think is an ability to do so in a sustained manner. And in such a dynamic environment where we have so many startups, so much venture money funding changes in the market on a really monthly basis, there aren't that many players you can say, well, they might actually be able to consistently execute over time. And we see that again this quarter.
And what do you think, Jordan, when you just step back and look at that sort of mega AI trade trend and theme, what is Palantir doing different in your opinion? What's their advantage?
This isn't just another earnings win. It's a signal that Palantir is moving into a new category. From early adoption to critical enterprise infrastructure, the trajectory is clear. With fewer and fewer credible competitors in the pure-play AI space, the company's edge only grows. And in markets driven by trust and performance, sustained execution is the ultimate differentiator.
Yeah, there's a couple of things here. So, we know they cut their teeth in the defense sector for a while. They've been doing this for decades at this point. And they started with really a services intensive business. In some ways, they were not fully just a software business. They've developed a certain level of AI know-how when it comes to actually selling AI. It's a complicated process. You have to identify a use case, you have to figure out how to monetize it, and then you have to put it into production in a customer environment. Initially, that required a lot of consulting know-how, and they developed their product over a long time to be able to make that more efficient and execute on that better. And once generative AI, once we all saw that market boom a couple of years ago, they were able to pivot that tribal knowledge, if you will, into a new product, that being their AIP platform. And we continue to see them execute on selling that product. And that's really the biggest differentiator, that they've been able to do that. And instantiated within that is not just a great product, but it's, again, that tribal knowledge that they have.
Jordan, it's interesting. I was talking to CEO Alex Karp about this. I want his take on a recession. We've had plenty of smart economists, Jordan, come on the show and say they think the probabilities of a U.S. economic downturn have increased. And I asked Karp about that, and he said, listen, bottom line, we're, in his words, crushing it now. The more difficult the environment gets, he said, the more unit economics matter. And the more unit economics matter, the more you have to move to productized software and AI-empowered software. That, he says, is our sweet spot. I'm just curious what you make of that answer.
What we're seeing is the payoff of long-term R&D matched with wartime execution DNA. Palantir didn't start with Silicon Valley fluff. They started in defense, where failure isn't an option. Now that same mindset is powering commercial wins with a product like AIP that's deeply grounded in real-world complexity. When Karp says they're crushing it, he's not posturing. He's summarizing a company built to win under pressure.
Yeah, and that's what they've been doing since before ChatGPT even really took the market by storm. They've been trying to scale down this product. And we've talked about this before. They try to scale down a product that's historically very difficult to sell. We're talking, over a year in sales cycles, 10, 15 forward deployed engineers, and you figure out how to turn that into an easy to sell product where you can quickly identify a new use case, bring on a new customer, and then scale from there. And that's the name of the game for software. And they've been doing that clearly. That's what the opportunity is for US commercial. And as we see 70% growth on very tough compares in the US commercial segment, there's really only one way to read that. They've been executing on their ability to deliver that more packaged software solution.
Jordan, thank you. Thanks for your perspective.
Palantir's story is about turning elite capabilities into mass market advantages. This wasn't a SaaS company trying to go enterprise. It's the opposite. They started in the hardest environments imaginable, and they've reverse engineered that power for commercial use. The shift from a sales cycle of 12+ months to scalable packaged offerings is no small feat. Most companies fail to make that jump, but Palantir is showing they can do it with precision. That 70% commercial growth isn't hype, it's validation. This is what long-term strategic execution looks like.